Well, major indices fell more than 3% on average yesterday after a wave of coronavirus cases were reported around the world. It was the worst trading day since February of 2018. Joining us now is Rebecca Walser, president of Walser Wealth Management. We witnessed another inverted yield curve yesterday, Rebecca, the largest margin since last October. Is it different this time around?
You know, this is obviously very heavily centric based on the coronavirus and the unknown, what we call the unknown unknowns, right? So is this going to be a global pandemic, interrupting supply chains, interrupting travel, interrupting luxury, interrupting all of those sectors that we really that really make a part of our economy, or is it going to be containable? And it's obviously a positive, but I want to strike a caution tone here that the market is rebounding this morning, because if this becomes, as ingrained or really widens and expands as we think it possibly could, if we don't get a actual, solution, we could see a pullback as much as 25%. So I don't really like the V's where we have a huge dip, worst day in 2 years, and then we immediately get the recovery the very next day. That's not enough time to digest and really process what's going on.
And so is that why you think, Rebecca, that we don't see a complete recovery of that 1,000-point loss yesterday?
Yeah, absolutely. And I don't think that it's a good thing that we volatility, obviously speculators make money in volatility, traders make money in volatility. But for the average Joe who's looking at his 401k, we don't want to have these big down days and these big up days only to get another alert from some other country besides Italy, besides South Korea, that says, oh, it's really impacting now. Another company coming out and saying it's affecting our supply chains like Apple did 2 weeks ago. And then or a week ago, actually. And then all of a sudden we get another big drop. It's just not a very volatility that is not good for the average person who's looking at the market and saying, oh, I'm starting to feel uneasy. This is a lot of these drops, and this is really starting to affect it. And then consumer confidence will go down, and we will have a ripple effect. So I would rather see a slower, I know it sounds ironic, but I would rather see that we take our time with this and really digest the news before we just, do a actual action.
What does this mean for the mom and pop investor, Rebecca, who had been on the sidelines, had money to put to work, saw how well the market did last year, got in at the beginning of this year, and just yesterday, all of the gains on the Dow wiped out? What does it mean for them?
Yeah, that unfortunately is the volatility of the market. If they were sitting on the sidelines, they missed out on a 10-year bull market, almost 11 years next month, as long as we don't go down 20% here. And so it's really hard to come in at the top end. The conventional wisdom, as we all know, Tim and Kristen, is buy low, sell high, not buy high. And people make emotional decisions on investing, and they say, oh my gosh, it's doing so well, I got to buy in. Well, when you buy in 10 years later, and we're really having market highs every single day, that's probably not the best time to buy in unless we get a pullback, unless we get some kind of correction. Yesterday might have been a great opportunity to take some growth off the table and maybe buy back in when we have some lower numbers. But I just don't think that we're completely adjusted to what's going to happen with this coronavirus. I'd feel much better if it was summertime and these things were stopping the spreading, because it's obviously related to, symptoms and colds of the winter time.
So do you think this is something we're going to be, that will be a distant memory for many investors come summer? Or is this the type of thing that we're still going to be talking about with you in a few months, Rebecca?
Well, Tim, the thing is, it depends on if it becomes a global pandemic. I mean, I know that a lot of people are starting to say, oh, this is actually a global pandemic. If we can get some kind of, containment and instead of expansion, if we can just get containment and slower growth, which would be a big positive, then we could actually know that, okay, this thing is on the decline cycle. But right now we're still just getting expansion. So if we can get containment down, even without an actual a cure, a vaccine, we can get some containment, I think that people will start to feel more safe about actually traveling again. We need people to travel so they can spend on luxury brands. We need the travel stocks, we need the hotel stocks, we need everything. We just need everything to come back to a beginning to normalize, so that we don't continuously see on every single bad news expansion that this is going to blow up. So hopefully that will happen by the summer. This is what I'm praying for, but I don't know what's going to happen with this virus, and the thing that is positive is that the death rate is very low compared to the amount of people that are actually infected. So that's a positive, but it is expanding still, and that's the uncertainty.
Rebecca, are you advising clients take money out of the stock market and stay on the sidelines, just hold their positions currently, or readjust their portfolios based on the virus?
It's a very hard call right now. So what we're having to do is look at each individual individually. We can't just give a blanket, okay, get out, because we might have a recovery and then we might go up and they'd miss some upside, right? But again, we're really looking for a slowdown of that expansion, because if we continue to expand and this continues to move towards more a global pandemic type of situation, then we know that we could have at least a 25% pullback in the market, in which case, it would have been better to get out now. So it's really case by case as far as where they're at in their, financial life cycle, if they're looking for, actual income right now, or if they're more of a long-term investor that is looking for capital gains. And so we have to look at each, we just don't know right now. This is so unknown to say what blanket advice is. We just can't say.
How much of a pullback would you want to see before you're comfortable telling people that it's a good time to get off the sidelines and get back in?
Well, based on our projections of what this could do, I mean, I would think that we could see a pullback of 25% or potentially greater. If it becomes an actual, this is like the apocalyptic times here, then of course the market is going to do much more than that. But for right now, we're thinking if things continue at this expansion rate and we're keeping to hear, more countries with more cases and it's just not being contained, then we're expecting something as high as, a 25% pullback.
Wow.
And that's why it's.
Yeah. I mean, 3.5% that we saw yesterday doesn't look so big in the context of a 25% decline. Rebecca Walser, president
That's
of
kind of
Walser
worst
Wealth
case scenario,
Management.
Tim.
I know it's
worst case scenario.
worst case scenario. Fair.
Yeah.
It's always
All
great
right.
to see you. Thanks for joining us this morning.
Thank you, guys.